All right. Hello guys. Good afternoon. Uh, it's an amazing Tuesday, 22nd of October, 2024, right here with you guys. The name is Adetola Freeman, and this is the seventh week of our 12 weeks mentorship with Adetola Freeman. All right. So today, we're gonna do a quick recap of the approach that I showed you guys last week. I think there was an error in the way in the communication of the strategy or the technique. All right, some of you reached out to me that you tested it or you tried it, it didn't really work out. All right, so we'll do a recap of that particular approach. All right, then we'll go into what I have for you guys today. Okay, so I think the stuff I showed you the approach I showed you last week. The strategy was on trading view, right? Hold on, that like all right. So basically, we have two moving averages, all right, and then we use the stochastics for the final support, right? So let me show you quickly what that system should actually look like. So first of all, you want to have your simple moving average, all right. You want to have one single simple moving average. All right, let me show you. So this is the moving average you want to have on your chart. Okay, good. So this is simple moving average. Yeah, this is the setting. All right, the period is 75. The source is closed price. All right, then the smoothing. For the smoothing, you want to apply it to SMA length 50. All right, the time frame, the working time frame is the 1 hour time frame. Right, the 1 hour time frame is the time frame you want to use for your analysis. Right, so based on that, you ensure that this is ticked. Wait for time frame closes. Then you come over to style. Right, you tick the MA, you tick the smoothing line, and then you can return to the approach that. All right, so this is what you have. These two moving averages automatically pop up on your screen. All right, now one of these moving averages is your actual moving average. All right, while the second one is the smoothing. All right, the average of your moving average or the smoothed um, values for your actual moving average. And remember, this moving average is applied on the 1 hour time frame. Okay, but the time frame you use for entry is either your 15 minutes or you either use your 15 minutes or your 5 minutes time frame for entries. All right, so the simple approach is this: when the moving average is above the smoothing average, all right, the smoothing average like this, all right, you can see the blue is above the orange, all right. When you have that and your stochastics is in the oversold position, all right, you're looking for buying opportunities, right? This is one, this was another one here, two was another one, right? This one right here, three, and basically you want to ensure that whatever order block you're using, all right, has not been tested before. All right, so that demand or supply order block, you want to make sure that it has not been tested before, because that is, if it has been tested before, it means that you're going to be working with a very uncanny figure, right? Because that zone is most likely going to get broken. All right, it's most likely going to get broken. So hold on. on. I just noticed that you guys are not seeing when this. That's still it. All right, so now you should be able to see it when it's oversold. You're able to see it now. So you see that all of these entries were taken when the stochastics was oversold. And for the values of the stochastics, remember I showed you that we're using 30, 38. All right. We're using the values 30, 30, and 8. All right. So K length 30, K smoothing 30, D smoothing 8. All right. So that's practically what we want to use. All right. 30, 38. Those are the figures for for the stochastics. And the time frame, of course, is the 5 minutes time frame. All right. So secondly, you look at it and see here, you see that the moving average is below the smoothed moving average. All right. And right here, you see that this was the first time it was overbought. Right. We had this small entry. Okay. Then it happened again. It was overbought again into this other block. We had our second entry. Okay. And then it happened again. So you need to be able to simply train your eyes, all right, to identify those other blocks, all right, or the demand and supply zones that you're going to work with. Whether it's a drop-based drop, drop-based rally, rally-based drop, or rally-based rally, all right. So you need to train your sight to be able to identify those key zones, all right. So this is the recap for last week's strategy that I said that I needed to clarify a few things based on the questions that I got in my DMs. All right. So practically, if you use this, I'm not saying it's 100% accurate, but if you work with this trading approach, with this trading strategy, you're going to have very, very slim stop losses. Right? Your stop loss is going to be extremely tiny. All right. But at the same time, you would be making some good money. If you target 1:3, all right, on each position you take, you're targeting between 1:3 to 1:5. All right. More than 60% or 70% of your trades are definitely going to eat TP. All right. So you just want to ensure that you train yourself to be able to identify valid demand and supply zones. That okay? All right. So with that said and out of the way, all right, we're gonna go back to what I actually would like to show you guys today. Um, Today we're going to be talking about the average daily range. Sorry, the average true range, but on the daily time frame. That's where we're going to be using it. It's almost like an ADR. You get to see what I mean. All right, guys. So this is gold. All right. It's just a normal naked chart. All right. Let me show you. Let's do it on a plain chart. The lazy programmer, can you hear me better now? Please let me know if you can hear me better, all right, so that we can press that ASAP. All right, so this is GBP card, all right, on the 1 hour time frame. And typically what you want to do, all right, is first of all, you want to identify the trend, All right, is the market in a bullish trend or a bearish trend? And then once you have that figured out, there is this indicator called the ATR probability levels. All right, the ATR probability levels, you're working with the, the default settings. All right, the default settings. I'm going to drop this ATR probability levels indicator. All right, I'm going to drop it in the Telegram group, the general free Telegram group. All right, so that you guys can download it and also test it out yourselves. But you see that once I install this ATR probability levels, all right, it's going to mark out ranges, all right, S1, S2, S3, R1, R2, R3, where S means support, all right, R means resistance. Now, what does that mean? It simply means that this indicator is going to mark out support and resistance levels for you, all right, based on the average true range of price movement over the last 1 day. All right, so the ATR value, ATR period 21 for the previous day, all right, is going to be the basis for price measuring your likely areas of support and resistance. Okay, do you get that? And once those levels are marked, all right, all you have to do is to look for entries around those levels. All right, you just want to look for entries around those levels. Whether you want to plot, probably you want to plot your demand and supply to see if it intersects with such levels. So see, for example, this is definitely a bearish trend on GBP card, right? Why did I say it's a bearish trend? This was the previous low that created the overall high. You can see that that low has been broken. All right, we can see that that low has been broken, meaning that what we have now is a higher high, lower low. All right, so we're expecting a lower high, and that lower high already happened here, right, from this region here. Right, let me zoom in. So the lower high already happened around here, right, from this other block. And what that leaves us with is the fact that the market is currently in a bearish trend. All right. So what do we do next? We want to mark out our ATR probability levels, and you can see these are the 3 levels. All right. Daily probability R3, daily probability band R2, daily probability band R1. All right. Once we have that marked, what do? We look for our demand and supply zone. This is an inside bar. All right, that's an inside bar. And you see that once you mark that inside bar, you see that that was where price came to touch, all right, before dropping. Lucky Fingers Academy, I'm sorry, I might not be able to give you that answer, whether or not gold will touch 3,000 before the year ends. We are not people that predict price, all right? Let me quickly point that out. Our job as traders, all right, is not necessarily to predict price. Our job as traders is to react to price, all right, to analyze price and then react to it based on the data that we have, right? Oftentimes, when people predict, they become gamblers in the market, not traders, all right? They become gamblers. But when you have statistics, you have data to prove your sentiment, all right, that is when you can say that you are an analyst. So generally, whether or not price will reach 3,000 on gold, there are a lot of factors that determine that. All right, one of them is going to be the fact that people are uncertain about how the U.S. elections are going to turn out. All right, and a lot of investors want to see how that election will turn out before they can start investing in the U.S. dollar. All right, so most investors who probably should be trading the dollar right now are going for safe haven assets, all right, or buying gold with their funds, all right, because they're trying to avoid investing in an economy that is unstable, all right. So then the crisis in the Middle East, crisis in some regions of Europe, all right, is also contributing to, the bullish impact that you're seeing on gold. So it's not all technical, all right. There are also some fundamental undertones that are affecting the price of gold, all right. So to tell you, oh yes, gold will get to 3,000 before the end of the year, or to say no, gold will not get there, I would simply just be predicting, right? And that would mean that I'm just a gambler, okay? And I probably should wear a sporty bet shirt or something. All right, so you'll see that when price got to the region of our supply zone, that was where the drop started from, okay? And based on the fact that this is a bearish trend, all right? Trust me, this could work on almost any commodity, all right, except when there is excess volatility in the market, probably on days when you're having something like NFP or the likes, all right? But if you're trading, a solid trend, all right, trust me, your ATR probability levels will provide you with some reasonable areas, all right, where you can check for reactions. Let's do this on Euro USD. Let's pick a Euro USD chart. Analyze it with the ATR probability levels and then look for entries around the ATR probability bands. A lot of people are curious about gold, and I understand why they are, but it's important to understand that regardless of your curiosity, your job is to react to price. All right, your job is to react to price. I had a stream with FBS clients yesterday, and more than 4 or 5 people kept asking me about gold. All right, and this question also came up about whether or not gold is going to get to 3,000. Okay, let's use Euro AUD. All right, so this is Euro AUD chart. All right, I'm going to show you guys something there right now. Just let me. The chart is loading. I don't understand why my MetaTrader is so slow. It's one of the reasons why I migrated to TradingView recently. Because at least I know that as long as my internet connectivity is okay, that is going to load up as quickly as possible. Once the Euro AUD chart loads up, you're going to see something. Come on, bro, back to you. Just yourself. All right, so if you look closely at the Euro AUD, all right, you're going to see that this was a demand zone, this region here, all right, and there was probability band around that region. And you see that when price got to the support band 1, there was a reaction. When it got to support band 2, there was a reaction. All right. So currently, if I want to trade Euro AUD, I'll be looking for opportunities to buy from somewhere around here. All right, from somewhere around here, because of course that also looks like a QMR pattern. All right, but that demand zone is something that I want to take this buy from. Do you guys see that? Let me know in the comment section if that made sense to you guys. So, AUD, you see that our expectation is for a bullish opportunity. All right, our expectation is for a bullish opportunity because we anticipate that when price gets to, that is the ATR daily probability band S2. All right, so we're anticipating that when it gets to that S2 band, we're expecting there to be a reaction. All right, we're expecting to see a reaction from there. Welcome, Mr. Kudus Ajala. So that is how the ATR probability band works. I know you guys have seen a lot of people talk about how to use ATR in your trading. All right. So I know that many of us might have challenges with that, because if you're using ATR, the regular ATR, you need to do a lot of calculation to be able to figure out those specific points. All right. But this ATR probability band already does all of the calculation on your behalf and even plots the support and resistance levels. All right. So what you can simply do is, from those support and resistance levels, you want to mark out demand and supply zones that you can easily take trades from. All right. And once you take those trades, you can already know, okay, if the overall trend is bullish and I'm entering from a demand zone, I am targeting probably R1, R2, or R3 for my exit. All right. You could easily do that and make a few pounds or a few dollars for that particular trading day. Do you guys get it? Do we get it, please? If you do, probably you have a commodity you like us to take a look at. All right, you can just mention that in the chat box. All right, I'll check for that commodity and then we'll quickly do an analysis of that commodity. All right, USD CHF it is. Okay, let's see. USD CHF. Okay, so this is USD CHF. I need the chart to load up first. And you see that based on this USD CHF chart right now, all right, this is our daily probability band S1. This is S2, that's S3, all the way down there. All right, so if I want to take a trade, what do I want to do? The answer is simple. Where are my demand and supply zones? All right. Since this looks like a bullish trend, it means that I will be looking forward to bullish entries. All right. So I think I can mark out this demand zone. All right. You can see that that demand zone is right on top of the S2. All right. The daily probability band S2. And that was the demand zone that brought about the break above this eye. All right, do you guys get it? So that demand zone was responsible for the break above this eye. All right, and we can see that it aligns with the daily probability band S2. Okay, so the expectation here would be for price to probably come into that demand zone. All right, and then we can expect it to bounce higher. You're welcome, my friend, Lucky Fingers. Okay, I think someone else is saying GBP card. We actually talked about GBP card briefly, but I think you joined a bit late. All right, so just hold on. All right. Okay. Let me see. My MetaTrader is hanging a bit, but hold on. Come on, MetaTrader, what's going on? What's this? Wow. Sorry, guys. Please hold on. My MetaTrader is misbehaving. Because every other thing on my PC is working perfectly, and I don't understand why it's just MetaTrader behaving like black sheep. Hold on, please. I'm checking if there's something wrong. Apparently, there's no issues with it. I can see that it's not running any processes at all, which is sad. Please hold on. No, it's not like I'm ignoring you. I can see GBP card and NZD USD. Just hold on, please. I use. I'm gonna have to switch to another MT5. Let me see. Okay, I think we'll use the other MT5. Please don't ask me how many MT5 terminals I have running on my. Please don't. Okay, so I think here we are, GBP card. You guys might probably not see my screen probably, but properly, but just manage whatever it is that you have. Lucky fingers, please don't ask. I actually have several terminals running at once um, because of all these activities that someone has to make money. Okay, where's my trend line? Yeah, so this is GBP card, all right, 1 hour time frame. Remember, when you're using the ATR probability levels, it's better to stick with the 1 hour, 4 hours time frame. All right, better, much better. I usually have about 3, 4 terminals open at the same time, plus maybe around 120 something Chrome tabs. Okay, it's not up to 100. It's not. Yeah, it's about 60. Yeah, not so much. All right, so this is GBP card. All right, this is S1, this is S2. All right, this is S3. Those are support levels. All right, and you can see that the GBP card I was explaining to you guys earlier. All right, it started a bearish trend. It was in a bearish trend. All right, and it reacted from the S2. All right, the daily probability band R2, which is the resistance level 2. Right, and then I think, like I said, we talked about it at the beginning of the session. All right, the fact that there is this supply zone somewhere here from the inside bar that price decided to react from. All right, so that is GBP card. If you knew this strategy, you probably would have made an amazing sell from GBP card and cashed out some money already on GBP card. All right. Now, one thing you need to understand or note, however, is that price is not every day that price will get to the ATR levels. All right, it's not every day. But if you get your charts marked out properly, all right, and price gets to the ATR level that you marked, you are most definitely or most likely going to get a reaction. Okay, you're almost certainly going to get a reaction. That's because let me give you an example. If you hear that probably a child that has always scored between maybe 6th to 10th position in a class, all right, 6th to 10th position in his class, is going for an international competition of more than 2 million students, all right, what position do you think that student will take if even in his own class he has always been between 6th to 10th position? All right, so I want you to take a lucky guess. If everything works in his favor, what do you think is the range of positions that he can take? All right, I want to see your comments, please. What position do you think he's going to return with? Just take a lucky guess. Just guess. All right. He has always been between 6th to 10th in his own class, meaning that he's not even the best student in his own class. All right. So you should already be able to probably assume or guess that that guy is not going to be among the 1st to 3rd students in that competition. All right. His chances of being among the best 3 students in that competition is extremely low. All right, exactly like Mr. Ajala said, probably around position 1 million or lower. Okay, now what does that tell us? It tells us that when you have an average understanding of how price is expected to perform, all right, maybe yesterday price moved between, say 30 to 50 pips. All right, that was all the movement that price made yesterday. All right, the ATR value for today, all right, will be based on the fact that price had an average range of 50 pips yesterday. All right, so based on the fact that price had an average range of 50 pips yesterday, the ATR is then going to give us values for the pips that we can expect price to do today. Do you understand now? So the ATR probability levels are levels that tell us averagely where we expect price to react from, all right, based on the average performance of price yesterday. Do you understand now? So for GBP card, this would have been the very amazing sell, all right. Over time, you might want to check when price gets to the S2 band, You might want to check if there's an entry confirmation around that region. All right. Probably price might want to buy a little bit so it can return back to this supply zone and then drop a lot better. All right. So that is GBP card. All right. Finally, I think the last one was NZD USD. All right. Beautiful. NZD USD. What are you guys seeing? Let's zoom in. What's the trend on NZD USD right now? Who can help us with that? From this chart that you can see, what's the current trend on NZD USD? Is it bullish or bearish? Beautiful. It's a bearish trend, all right? The sellers are in charge of the market right now. And when you now look further, all right, when you look closer at what's going on, you see that we already have this supply zone that is aligning perfectly with the daily probability R2 band. All right, this is the second resistance level. So from here, what position are we looking for? We're expecting price to sell. Fantastic. All right, from this particular region. Do you get it now? So this is how simple it is to actually work with the ATR probability bands. All right, extremely simple. All you have to do is set it up on your chart, mark out your demand and supply levels, and then you can easily know, okay, price has gotten here. All right, I'm going to pick this up. Fantastic. Based on what I showed you guys last week. Beautiful, beautiful, beautiful. NZD USD. Let me check that quickly. Let me read the thing on the 5 minute. You're welcome, Mr. Jala. Hold on, I'm trying to check my trading view. Oh, fantastic. Yes, yes, yes. And your stop loss would have been a lot smaller if you entered based on last week's session, all right, last week's class. I'm really excited that at least some of you guys are cashing out with some of these things that I've been showing you. Yeah, that's a lovely one. That's a lovely one. Let me just quickly show what that looks like on NZD USD on TradingView. So you can see the moving averages are bearish. All right. This is a supply zone that broke below this low. All right. And you see that our stochastics is absolutely hot. So that tells us that we're looking for a sell. All right. And entering from this 5 minutes time frame, you guys remember I told you that we're targeting between 1:3 to 1:5. So that will be 1:3, and this will be right? So it's really as simple as that. It's really a no-brainer, all right? Because once you put your mind to it and you practice, you realize that all these things that I'm teaching you are actually things that can work for you as well, right? That can work for you as well. Okay. Oh, sorry, I didn't show you guys. This is it. This is it. NZD USD 5 minutes. I've gotten an entry from this supply zone. Currently, this trend line is what price is reacting. I believe price is going to break it since the overall trend is bearish. Right? Can you see that? So we're expecting price to just come all the way here, which is our target. All right. If you're targeting 1:5 to reward, you guys get it now. It's actually as simple as that. All right. So with that said, I think we can go on to wrap up tonight's session. All right. It's been an amazing 1 hour with you guys, almost 1 hour, about 43 minutes with you guys. All right. Thank you so much for for joining in. Thank you so much for your time, for your patience. All right. I'm really hoping that when we end this session, many of you would already have sufficient knowledge to be able to profitably trade on your own. All right, and make some consistent income. Okay, that's my prayer, that's my desire, and I trust that God will give you guys the strength and the wisdom to make it happen. All right. With that said, I want to say thank you so much, guys, for spending this time with us. All right. Thank you so much for always turning up whenever we have live sessions. Thank you so much. God bless you, and I'm wishing you guys the very best of the best. Have a fantastic and profitable week. Bye bye, and God bless you. Let somebody shout hallelujah. I'm a trader in my country. Everybody knows me well. Start me up and down. You will see that is stand lily.